Lots of red on the local market today. Earlier I spoke to Marcus Padley from Patersons Securities. Well, Marcus Padley, oil and mining stocks have taken a battering. Is this a major rethink or a bout of profit-taking?
Well, I don't think we can call it major yet, Tiki, but yeah, the resources certainly got it in the neck today. The sector was down over 2%, whereas things like financials were down less than 1%. So very much a resources thing. I don't think the IMF stuff overnight, which downgraded Australian growth, started talking about the Asian or emerging economies being potentially overheating. I don't think that did too much damage. I think it was probably down to the Japanese upgrading their nuclear disaster another notch to Chernobyl levels, actually. And I think also there's a fair bit of commentary about the Aussie dollar at a record high, the oil price, the 2.5-year high, gold price at a record high. Everything priced in US dollars is at a record high, which sort of tells you maybe it isn't anything to do with commodities. It's more to do with the US dollar. Anyway, the Aussie dollar sort of peaked, the oil price peaked, and the gold price peaked overnight. And as we're bouncing right up on the highs that we've seen since the GFC, this was a really important level that we'd either fail at or go through, and we've failed miserably, at least today.
I see a number of miners have issued production reports. Fortescue Metals and Iluka?
Yes, Fortescue, they were down 3.68% today. Iluka was down 2.2%. Fortescue were complaining about flooding in the Pilbara, which dropped shipments by 16%, whereas Iluka saw mineral sand sales up 51%. So mixed bunch then. I don't really think either of those numbers have had too much impact on those particular stocks. I think they've just got caught up in the resources malaise. We've got Rio's numbers tomorrow, production numbers, and we've got BHP's next week, and a whole host over the next couple of weeks.
Now, I see there's talk of building company Osco Limited coming out of private equity ownership with a $500 million float. What do you make of the timing?
Well, the timing apparently, Tiggy, is more to do with the private equity group needing the money. But it's not bad timing, I have to say. What Modular Osco do is they provide sort of modular housing. They've got something like 12,000 units, and they are presumably trying to take advantage of long-term, particularly resources projects in this country. And although, they don't appear to be in control of the timing's pretty good, because some of the best performing stocks in the market have been these accommodation providers. In particular, Fleetwood Corp is up from $3 to $13 in 2 years, and a Perth-based accommodation provider, Decmill, is up from 12 cents to $3.40 in the last 2.5 years. So it is a hot sector, good time to be listing it.
That may be a hot sector, but at the same time, building products firm Hasty Group has shed, what, 3/4 of its value?
Yes, it has. Hasty, we've seen down over 70% today. They were 92.5 cents. They're down to about 28 cents. They have had trouble with their lenders. They've signed a new sort of syndicated facility and a standstill agreement till the 1st of August whilst they try and find other backers, I think, for the company. They sort of do more commercial air conditioning and refrigeration into supermarkets and service contracts on the back of all that. And they seem to have got involved in a lot of projects right at the top of the market pre-GFC with a lot of debt and small margins, and they're paying the price now.
Marcus Padley, thanks again for joining us on Late Line Business.
My pleasure, Dickie.